Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you have joined us for our 3-day Precious Metals and Critical Minerals Conference. The next presentation of the day is from Great Pacific Gold. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting. At this point, I'm very pleased to welcome Alex Heath, Chief Financial Officer of Great Pacific Gold, which trades on the OTCQX best market under the symbol GPGCF and on the TSX-V under the symbol GPAC. Welcome back, Alex.
Thanks, Greg. Yeah, thanks everyone for joining me today. My name is Alex Heath. As Greg mentioned, I'm the CFO of Great Pacific Gold. I'm really excited to present to you today. I'm hoping that you'll be able to glean a little bit from the slides here that we do think we're developing one of the best early stage development opportunities in Papua New Guinea, district scale gold and copper opportunity, high grade epithermal veins with some porphyry upside. And I hope that I can present to you today why we think now is a good time to be looking at Great Pacific Gold. Before I get into anything, I just want to remind everybody I will be making some forward-looking statements. As any exploration company, things change as we go, as we drill, as we advance the project. So please, before you invest any money, do your own due diligence and just be reminded that things can change rather dramatically and quickly. I'll start off by just giving you a quick corporate snapshot. We're in a great position right now. We've got $26.3 million in the bank. We are fully funded for our 2026 drill program. We've also got a little bit of investments on the side. This just provides us with additional capital. That's from selling off some assets, which I'll get into a little bit later. Our capital structure is 195 million shares. We've got about 11.4 million stock options granted, 7.3 million RSUs, and 50.8 million warrants. And you can see in really tiny writing there is the actual breakdown of those 50 million warrants. Anywhere between 45 cents and 70 cents, going from or expiring anywhere from December 24th, 2026 this year to as late as April 2nd of 2028 for a fully diluted share count of approximately 265 million shares. You'll see on the right, we've got a breakdown of what the percentage is in terms of retail versus institutional, and what's changed in the last, call it 18 months or so, has been really focusing more on institutional investors. The company was originally funded almost exclusively by retail brokers, retail investors. And over the course of the last 18 months, as I described, we've really been focusing more on trying to get institutional backers, really smart money who can back us in and out from what we're seeing in the drill bit. So that's been a major coup for us over the last 18 months. So why GPAC now? In a nutshell, we think we have the right people, we're in the right place, and this is the right time. In terms of people, we think we have one of the strongest geological teams in Papua New Guinea. Callum Spink, who's running our exploration programs, he's worked his entire career in Papua New Guinea, and he's bringing with him some of the top quality talent that you get in Papua New Guinea. You'll see on the next slide, we'll show you some of the companies that are operating there, and you'll see why we think we've got top talent. In terms of the place, obviously, Papua New Guinea is a very rich geological environment. We did shift originally away from Australia. We had a number of assets over there, but just given the opportunities and sort of trying to figure out where we could best allocate capital, we decided to divest of all of our Australian assets and focus exclusively in Papua New Guinea, and more specifically on our Wild Dog project, which is large scale, again, district scale, high grade gold with porphyry upside. We do have three other assets, two which are right around K92's project in the highlands of Papua New Guinea, but we really are focused on Wild Dog. And in terms of timing, you can see it we did a financing in April. We were able to raise $20 million. In fact, we had interest for much more than that, but we just sort of limited it and try not to dilute too much. So really our focus is on Wild Dog, where we've done a ton of exploration, mobile MT, LiDAR. We've looked at historical data, and we're building a pipeline of exploration targets that we're going to be drilling as we go through, and with 2 drills that are currently on site. So in a nutshell, we've got a lot of catalysts for advancing the project, not just on resource upgrade, but also in terms of looking for new potential discoveries along the major wild dog trend. So why Papua New Guinea? I mean, if you look at this map here, this is the country. It's about the size of California, but within that, you can see some of the largest gold deposits in the world. Like here, 36 million ounces. Porgera, which is owned by Barrick, is 6 million ounces. K92, it's sort of the darling of the Canadian exchange here, is 6 million ounce deposit. Newmont with their Wafi-Golpu is 22 million ounces. So really, this is elephant country. So significant deposits, both in copper and gold, or both together. So this is really where we're at. You can see where Wild Dog is. It's on the island of East New Britain, and now I'll sort of zoom in on the next slide, and you'll see exactly how big our project is. But so world-class geology, but also because we've got all these major companies, Newmont, Barrick, Octeti, Santa Barbara, we've got just the talent pool is significant. Geologists who have not only made major discoveries, they've worked on top-tier projects, and they know safety and all the key exploration. And also, last but not least, is just access to equipment, drills, very important when you're working in a jurisdiction like Papua New Guinea. So zooming in on, this is a fairly significant portion of East New Britain. We've got a district scale land package of 1,400 square kilometers. As far as the eye can see when you're standing in the middle of it, that is our land package. Really good infrastructure. I've got the next slide that'll show you exactly what we're dealing with and how easy it is to actually operate on this project. But really what we're focusing on, there's kind of two main areas here. One is on the main epithermal veins. And what we've seen is we've traced out for approximately 15 kilometers the main geological trend. And within that, there are areas that have seen historical drilling. We see high-grade gold on surface and at depth. And then there's other targets that we're looking to advance. Within that and outside of the main trend are these major porphyry potential deposits. So, so really the focus is on the meat and potatoes of the project are the high-grade epithermal veins that we're seeing, but also there's this potential for really hitting a home run on one of these porphyries. In terms of the infrastructure, I couldn't say much more than this is incredible infrastructure for where we are. We had an analyst site tour in November, and at 7 a.m. we were having breakfast in the capital city of Port Moresby, and by 10 a.m. we were on site looking at drill core. So it just tells you how quickly you can get there. Infrastructure is great. There's an airport, has multiple flights daily to the capital. That's at Takwa Airport. There's a sealed road that goes probably 75% of the way to the project. It's mainly for forestry, but there's also, in addition to that, you can see there's this called the Warrangoy Hydroelectric Power Station, which is a run-of-river power station. So, if we're going to be developing this project eventually into a mine, you've got access to power right along the main road. And last but not least, the port of Rebel is a deep water port. So if we're producing a concentrate, you can truck it right to the port and then off to the Asian smelters. So really major advantages here. Obviously, access. You don't have to sling a helicopter or sling drills with a helicopter onto site. It just saves you money. You don't have to worry too much about weather. Getting in and out of site is very easy. And lastly, but not least, is in terms of the local population there. We're dealing with one landowner group instead of in some cases where we have other projects, we're dealing with 10 or more different groups. So it just makes it easier. We've got a great relationship with the local group, and again, it's just one, so it just streamlines everything. So I'm going to talk a little bit more about how we're targeting the main, like I said, meat and potatoes or the epithermal veins. And This project was originally operated and there was mining that went on, not significant, but probably mined about 50,000 ounces by the previous operator. They were working on Synovit, which is that red star kind of in the middle of that main trend. And so there's a lot of drilling that's been done, very shallow. They were just trying to mine the oxide on surface, and they tried to heap leach it. Didn't really work out for them. You are in fairly thick jungle here, and it rains a lot, so it didn't really work out for them. But what we see is we're more interested in proving out what's at depth and along strike. So not necessarily just interested in the first 10 to 20 meters. We're looking deeper. We're drilling holes as much as 500 meters, but on average about 150 to 200 meters deep. Kawasuki, again, another area that has a bit of drilling on it. So those are the two main areas. This is going to provide us with kind of proof of concept. We're seeing high-grade gold near surface, lenses along strike, and the next slide will give you a long section. You can kind of see what we're driving at here. But what our team has done is that they've looked at this main trend using mobile MT, IP, geophysics, stream sediments, you name it. And we're building a pipeline. So it starts with target definition. We've probably got 20, 25 different targets. It goes through different phases of exploration and prospecting to sort of go through that and bring to surface which are the most prospective for drilling. Obviously, we don't want to drill every single one. We don't have unlimited funds. So what we're trying to do is just see which ones have the most potential, which ones have all the exploration targets that or tools that we're using sort of coming together, and then doing some trenching, sampling, and then eventually drilling is the last phase before we've got those targets. So like I said, target-rich environment along strike. We're looking at this area here, right, is just the main 4.5 kilometers. And there's 15 kilometers of this trend. Again, here we are zooming in. This is a long section looking at Synovit in the center, and then to the north is Kawasuki. These have had historical drilling. We've also drilled it just to sort of confirm and also drill a little deeper. And you can see in that main Synovit, there's kind of two main zones, southern oxide and the northern area. At Kawasuki, same thing. We've done some drilling, trenching, and just trying to fill in the gaps. At Everett Hill, this hasn't been drilled yet, but what we're trying to show is essentially that there are high-grade chutes that go all along trend, and we just need to zero in and continue to show each one of these lenses is potentially, up to 200,000 ounces. We string enough of these together, you're looking at 1 million ounces, and you continue on along that 15-kilometer trend. You can kind of do the math here in terms of what the potential could be. Magyabi vein, Mengmet, and these other targets we have not yet drilled. Again, this just comes down to prioritization. Which is the most prospective, which is going to have the biggest impact for our shareholders, which is going to have the best discovery, and ultimately what's going to add ounces and ultimately become a resource and a mine. Synovit here, we're just sort of kind of following up on the historical mining that took place. We've drilled 18 holes to date, totaling about 3,000 meters. There's two high-grade chutes. You can see in the center here, one of our best holes was 8.4 meters of 50 grams per ton gold, just the whopper of a hole, including some copper. So very interesting. These are similar type grades to what is being seen at other projects in Papua New Guinea. So, not too dissimilar from K92. Don't want to say too much about that. It's not exactly the same, but it is exciting, high-grade gold and copper. What we want to do here is show that it's not just at surface. We've drilled some deeper holes, and again, along strike, just to sort of build out a potential resource. This Synovit and the next one, which is Kawasuki, are really what we think are sort of the anchor assets for the project. But again, like I said, we've got 25 plus targets. The more of those that we can see, we can turn into Synovit and Kawasuki type areas and then string those together for a resource. At Kawasuki, this is about a kilometer north of Synovit. Historical high-grade hits. this is where we're going to get the quickest path to resources are on these two main areas. And it's just really confirmation of historical drilling, repeatability, and showing what we learn at Kawasuki and Sinavit we can apply to other areas that we discover as we move forward. The next couple slides I'm just going to point to are areas that have never been drilled before. These are really what we think are very exciting. Cassie Ridge, which I believe is just north of Kawasuki, is a deeper target, but we're drilling through a lithocap. Here, I think we've started drilling already. We're just trying to orient the team and sort of figure out exactly how to target this. It's a little bit difficult right now. So we were hoping for some drill results earlier, but just encountering a little bit of difficulty getting through that main lithocap. But again, if this is high sulfidation system, it's never been drilled before. What we're looking for is the geophysical signature with structure. This has big potential for exploration. And at Megmet, same thing. We've got high grade on surface, up to 19 grams per ton. This is 2 kilometers south of Sinavit. So you can kind of start to put things together. 1 kilometer north of Kawasuki, the main area is Sinavit, Kawasuki, and then to the south, Megmet. Again, never been drilled before. Following up on some trenches that we had, 4 meters of 2.5, 30 meters of 0.6. And then this middle area, we don't really know because there's a cap of ash and other rocks on top. Again, here, one drill hole, we could be off to the races. And finally, before we get into some of the Q&A, is really what we think is major upside potential is the porphyry potential on the project. We have talked about this previously in the past. Maggie is probably the most compelling target we have, but it's just one of many. When we talk about porphyries, these are basically the plumbing system, district scale, which provide, the fluid flows that really provided that gold that we see in those high-grade epithermals. These targets are generally quite deep. They're lower grade, so there's this kind of why we need to do a little bit more work, and why the drilling that we're doing at Cassie Ridge, Sinavit, and all the other areas are really providing us with more information that'll help us target these areas, because you're looking at between 500 and 1,000 meter holes. Those are big swings to take, big upside obviously if you hit and you've got a high grade porphyry, but again, this is sort of more the sizzle for the opportunity here. So that kind of wraps it up in a nutshell. I'm going to quickly switch to Q&A here. But again, like I said, we think we've got the right team, great guys on site right now. Amazing project, great infrastructure, and fully funded for 2026 in our drill program. So I'm going to quickly jump to the Q&A so that we can answer all those, and I'll just start from the top. It says, first question is, when will you be going back and drilling Sinavit to follow up on the NS, the northern zone? Okay, so that really has to do with just targeting. Right now we're drilling on Kawasuki and at Cassie Ridge, and really just a prioritization. Depends on what we see at Cassie Ridge. If we drill and we've got a major new discovery, we're going to be there for a little while. Really at Sinavit, we probably won't be going back there until we really see what's out there at Cassie Ridge. Next question is, given that Walhalla, so something that I haven't touched on was one of the divestitures we did last year. The final one was the spin out of our Walhalla project to a company called Walhalla. And this question is related to that. So given that Walhalla has now completed its CSC listing and it's externally funded, how much more management and capital bandwidth can you now dedicate purely to accelerated the PNG portfolio? It wouldn't change anything. We weren't putting any real time or management or capital into Walhalla. That was really just sitting in our portfolio. It's one of the reasons we spun it out, is that we weren't going to be doing anything on it. So that one really is, it doesn't really change anything for us. Next question. With Wild Dog, Mobile MT, LiDAR, and Geochem now integrated, what gives you confidence that the current drill targeting could unlock a genuine district-scale gold-copper camp rather than just a single deposit? We're very confident of that. Yeah, like I said, if you go back to one of our earlier slides here, slide 8, this is a target-rich environment. So we are seeing multiple targets that they're not just sort of, surface showings. In fact, there are very few surface showings just because there's a lot of ash. And so this is really using mobile MT LiDAR. We can see through, you could kind of penetrate through down to the bedrock. And so really it's just a matter of, getting down to where we can actually see that resource. And so, yeah, we're pretty confident that we're going to see more than just Kawasaki and Cinevit, and we're seeing that already in some of these other areas. Next question, from an institutional perspective, how should we think about the risk reward of funding the next phase of Wild Dog when you're still early in defining the system but already generating thick, consistent intercepts? Yeah, that's a great question. When we were financing in March, April of this year, one of the highlights was, or I don't know if it's a highlight necessarily, but one of the selling features was that, in 2025 to January 2026, a lot of our peers saw, 50+% appreciation in their share price just based on gold. And we really hadn't seen that. And that part of that has to do with, divesting away from Australia. There's kind of a shifting away, shareholders who were invested because they like Australia were coming out. So really it was a kind of a bargain, if you will. You're getting all that financing that we've done, all that drilling, the advancement of the project at the same price. So in terms of risk reward, we saw definitely the de-risking of the project over the last 12 months with no change in share price, really. So, and I think we're still kind of there. We're kind of hovering around that 45-cent range. So, I think if you just looked at where we were 12, 18 months ago and where we are today, a lot of discoveries have been made, a lot of advancement. We've got 2 drills on site. We've got $26 million in the bank. I think that gives you a pretty compelling view of being de-risked over the last 12, 24 months. Sorry, I'm just going to delete that. Next question. Early work at Kessar showed strong gold and soil and outcrop. How much optionality does the Kessar land package add on top of what you're already proving up at Wild Dog? Yeah, I mean, Kessar is right next to K92's project. So Kessar does provide that great optionality. What we need to do there is spend a little more time, get a drill on site, follow up on some of those targets. It's a lot more difficult to work at Kessar because it is, we were talking about infrastructure at Wild Dog. You can fly from Port Moresby to site to the airport, drive to site. Kessar, you have to take helicopter. You have to have, good weather conditions. It just makes it a little bit more difficult. So as of right now, we haven't allocated a lot of people and money towards Kessar just right now. That doesn't mean that we're not very interested in that project. It's just a question of reevaluating. Now that we have 26 million in the bank, we're going to have a review of the use of proceeds and make sure that we allocate properly. But Kessar is definitely a very exciting project in our minds. Just next question here. There's a lot of questions. Thanks everybody for participating. Company now publicly laid out a pipeline of priority targets along the 15-kilometer corridor. How confident are you that at least one of Cassie Ridge or Megmut can emerge as a new discovery that materially changes the district narrative? Yeah, I mean, Cassie Ridge, I think, is our VP Exploration, Callum Spink. It's his favorite target right now, and it looks really good. We've run it past a few other external parties. You never know. That's what's really exciting about exploration is you don't really know until you drill it. Are we confident? I mean, of course, but like I said, you don't really know. until you drill it, and we've got other targets as well. So it doesn't break our company if it misses, but if it does hit, it could absolutely be a game changer. It's a massive target, so we're excited. How's the team's prior track record in financing and building mine position GPAC to either advance Wild Dog on its own or become a logical partner for a major if the porphyry story at Magnetti comes together? That's a great question. So our CEO, Greg McCunn, has built and financed 3 different mines in 3 different countries. So, I think we've got enough connections with people. We've done it before. We've got financing partners. Even now we are discussing at very early stage with other companies that are in the area that are very interested in the porphyry story. Doesn't mean that it'll lead to anything, but it's I'm reasonably confident just given where we are. This is elephant country, PNG. The infrastructure is fantastic, and that's not lost on anybody. You always have to have the potential to build it yourself. I mean, that's where you're going to really add the most value. If it's just a drill it out and sell it to the next guy, I think you limit yourself. We can actually credibly say to people like, hey, we've built mines before, we've financed mines before, we know what we're doing, and we have good connections. So I think that's probably our best answer. It's not just about trying to quickly sell it off to somebody else or partner up. We're going to advance it as far as we can, and we've gone all the way before. Alex, you described the goal as becoming the leading gold copper development company in PNG. How does this current drilling cadence at Wild Dog along with that ambition over the next 12 months? Yeah, that's a great question. I think that there's a bit of a learning curve here with kind of getting into the country. We've got 2 drills on site. We want to see that cadence increase. We've got lots of challenges in terms of, partnering with new drilling companies. The weather sometimes can play tricks on you. So, we're going up the learning curve. We're learning very quickly, but, we would like to see, multiple drills on site. Not, we had 1 and that wasn't enough. 2 kind of provide you optionality. 1 can be kind of resource defining drilling, and the other one can be going out and sort of swinging for the fences. It'd be great to add another drill. We haven't discussed that yet, but I think we're all sort of thinking the same thing. How do we increase our productivity? 2, have enough targets on site as well. You can't just have three drills on site if you don't have enough targets. So it's also a question of how many targets do you have so that you're actually using your drills efficiently. So those are kind of the goals over the next little while. I've got about a minute and a half left here, so I'll take maybe 1 or 2 more questions. The rest, we'll have them come through to me, and I'll do my best to answer all those as we go forward. Next one is, with Kawasuki drilling already 688 meters into the program and more holes planned through June, do you see a path to having enough data by year-end to start talking conceptually about early pit shells or maiden conceptual study? I think that might be a little too early. We just had a discussion yesterday about this, and so it's just really comes down to, what is the plan? Do we want to go directly to a resource? We see multi-million ounce potential here. If we go for a resource right away, are we sort of limiting that? Does that sort of put a cap on things? But it's always good to know this ahead of time. If you know about metallurgy, pit shells and all that kind of thing. We do think about these things. It's not just drilling holes and hoping for the best, but it is sort of this balance. Do you limit yourself by wrapping around a pit shell around a resource that's probably too early. So yeah, thanks for that question. Maybe 1 more question, and then we'll wrap up here. GPAC now got camp and infrastructure in place for a significant increase in drilling activity. How does that operational readiness translate into faster discovery cycle and more consistent news flow? Again, comes down to productivity of the drill. Can we get it drilling as quickly as we want? Do we have enough targets on site so that it warrants potentially another drill on site? but we have lots of room at the camp, and just speeds things up. So I think that about wraps up my time here. Appreciate everybody.